Good morning, and welcome to TOITOI Japan Market Radio for Monday, December 8, 2025. I'm your host here in Tokyo, and this is your daily briefing designed specifically for global investors tracking Japanese markets. Whether you're managing exposure to Japanese equities, monitoring currency moves, or watching the Bank of Japan's policy trajectory, we've got you covered today.
Thanks for having me. Let me start with a quick snapshot of where Japanese markets closed today. The Nikkei 225 finished at 50,581.941, up 0.178%, while the TOPIX showed a bit more strength, gaining 0.795% to close at 3,550. The Mothers Index added 0.484% to reach 2076, and J-Rights were slightly softer, down 0.226% at 1988.0. On the currency side, dollar-yen is trading at 155.55, up 0.263% on the session. Commodities showed mixed action with gold in yen terms essentially flat at 15,600, up just 0.032%, while crude oil pulled back 1.465% to 59.2.
So a broadly positive day for Japanese equities with TOPIX outperforming the Nikkei. Before we dive into individual stories, what's the macro backdrop investors should be thinking about this week?
The key focus globally is really the Federal Reserve. We're in a week where Fed communications are going to dominate market sentiment, and that matters enormously for Japan. Any shift in the expected path of U.S. rates directly impacts dollar-yen, which in turn affects the entire Japanese equity complex, especially exporters. At the same time, we're seeing interesting cross-currents from China and questions about Fed leadership transition that are creating some uncertainty in positioning.
Speaking of the Fed, let's start there. Reuters is reporting that the Federal Reserve could find itself in a bind as it sets the stage for Jerome Powell's successor. This leadership transition story is gaining attention among macro investors. Walk us through what's happening and why it matters for Japan-focused portfolios.
Essentially, the Fed is navigating a delicate period where it needs to manage monetary policy while also dealing with the politics and market expectations around who comes after Powell. The challenge is that any perceived uncertainty or lack of clarity about future policy direction can create volatility in expectations about the interest rate path. For Japan, this matters tremendously because Fed policy is the primary driver of the dollar-yen exchange rate and the interest rate differential between U.S. and Japanese assets. That differential is what underpins the entire yen-carry trade dynamic.
So when you think about the potential market impact, where do you see the most direct transmission into Japanese assets?
Let me break it down by asset class. For Japanese equities, particularly the Nikkei and TOPIX, the near-term risk is volatility. If the succession process creates dovish expectations or policy uncertainty, you could actually see support for Japanese stocks as part of a broader risk-on move. But if a new Fed chair signals a more hawkish approach, that could pull capital toward higher-yielding U.S. assets and pressure Japanese equities. On the currency side, this is the key risk factor. Any narrowing of rate differentials would likely weaken the dollar and strengthen the yen, which directly pressures the profit outlook for Japanese exporters. And for JGB yields, they'll probably stay anchored near Bank of Japan policy rates in the short term, but you could see upward pressure if markets start pricing in a sustained hawkish Fed that eventually forces the BOJ's hand on further normalization.
That last point about BOJ normalization is critical. The market is still trying to figure out when and how much the Bank of Japan will adjust policy further. Do you think Fed leadership uncertainty accelerates or delays that process?
It probably delays it, frankly. The BOJ has shown it prefers to move cautiously and only when it has clarity on the external environment. If the Fed's policy path becomes cloudier due to leadership transition dynamics, that gives the BOJ more reason to stay patient. Governor Ueda has been clear that they're watching wage growth and inflation sustainability, but global factors, especially U.S. policy, are always part of the calculus.
Staying with the international theme, let's shift to China. Reuters reported that China's exports topped expectations in November, driven by strong sales to non-U.S. markets. This suggests Chinese manufacturers are successfully diversifying away from the United States. What's your take on this data, and why should Japan investors care?
This is a significant development for a couple of reasons. First, it shows China's export machine remains resilient despite trade tensions and tariff uncertainties with the US. They're clearly finding demand in other regions, particularly across Asia and emerging markets. For Japan, the immediate implication is intensified competition. Japan and China compete head-to-head in many sectors: electronics, machinery, automotive components, especially in third markets. So strong Chinese export performance means Japanese manufacturers may face margin pressure in those overlapping markets.
And beyond the competitive dynamics, how does this feed into broader market sentiment for Japanese assets?
From a market perspective, China's economic resilience is actually risk-positive in the near term, which means less safe haven demand for the yen. When China shows strength, it reduces the probability of a major risk-off event that would typically drive yen appreciation. So paradoxically, good news from China can actually support a weaker yen, which benefits Japanese exporters from a currency standpoint even as they face competitive pressure on the volume side. For Japanese equities, it's a mixed picture. Companies that supply capital goods and machinery to China could benefit from continued Chinese industrial activity, but consumer-facing exporters competing with Chinese brands may struggle. On the JGB side, stronger risk appetite generally means less flight to safety demand for Japanese government bonds, which could put modest upward pressure on yields.
So the net impact on the Nikkei and TOPIX is probably neutral to slightly negative in the near term?
I'd say modest pressure overall. The risk-on tone from China reduces defensive flows into Japan, and the competitive angle is a headwind for some sectors. But it's not dramatically negative, especially if yen weakness continues, because currency is such a powerful earnings driver for the export-heavy names in these indices. It really depends on which factor dominates, the competitive pressure or the currency benefit.
Let's round out the global picture with U.S. equities. Bloomberg reported that stocks nudged higher in what they called an upbeat start to Fed week. Global equity markets are moving modestly higher as investors await key Fed communications. How does this backdrop of cautious optimism in global markets translate to Japan?
The global risk-on tone is generally supportive for Japanese equities, especially in the short term. When U.S. stocks are steady to higher and volatility is low, that creates a favorable environment for carried trades and positioning in non-U.S. markets like Japan. The key variable this week is going to be what the Fed actually says. If Fed officials signaled that rates will stay higher for longer or that they're not in a hurry to cut, that would support dollar strength and push dollar-yen higher, which is a tailwind for Japanese exporters. Conversely, if the Fed strikes a more dovish tone, you could see the yen strengthen, which would pressure those export-heavy stocks.
And what about Japanese yields in that scenario? If U.S. yields move higher on hawkish Fed commentary, does that pull JGB yields up as well?
Generally, yes. JGB yields tend to have some correlation with U.S. Treasury yields, especially on the longer end of the curve. If U.S. 10-year yields rise on hawkish Fed signals, you'd likely see some upward pressure on Japanese 10-year yields as well, even though the BOJ is still capping the short end. The concern for Japanese bond investors is that a significant widening of the U.S.-Japan yield differential makes JGBs less attractive on a relative value basis, which could lead to outflows and further yield pressure. But the BOJ still has tools to manage this, and they've shown willingness to adjust yield curve control parameters if needed.
Shifting back to equities for a moment, we saw the TOPIX outperform the Nikkei today by a meaningful margin, 0.795% versus 0.178%. What do you read into that breadth?
TOPIX outperformance usually signals that the rally is broader based rather than concentrated in a handful of large cap index heavyweights. It suggests domestic cyclicals and smaller cap names are participating, which is often a sign of improving risk appetite and confidence in the domestic economic outlook. Given that we're heading into year-end, some of this could also be window dressing and portfolio rebalancing, but the breadth is encouraging. It's consistent with the modest risk-on tone we've been discussing.
As we wrap up, let's pull all these threads together for our listeners. What are the key themes global investors should be monitoring in Japanese markets over the coming days?
I'd highlight 3 main areas. First, Fed communications this week are absolutely critical. Any clarity on the rate path or any signals around leadership transition will drive dollar-yen and risk appetite, both of which are primary drivers of Japanese asset performance. Second, keep an eye on China's economic data and policy signals. We just discussed the export numbers, but ongoing Chinese demand and competitive dynamics in third markets will shape the earnings outlook for Japanese manufacturers. And third, watch the yen closely. We're hovering around 155.55 on dollar-yen, and a break higher toward 157 or 158 would be very supportive for exporters, while a move back toward 152 or 153 would pressure those names and potentially shift sentiment toward more domestic-oriented stocks.